We've heard this story before. Two charismatic MIT graduates travel west to Idaho National Laboratory and are blown away by forgotten nuclear technology from the 1950s and 60s. They decide to fix that mistake, to build a reactor that takes nuclear waste and turns it into clean energy. Soon they're touring the country, pitching their vision, attracting Silicon Valley investors, and before long, their little startup becomes the hottest name in town. That company was Transatomic Power, but now history seems to be repeating itself with another name, Oklo. On Transatomic's old website, which by the way is still online, they described going back to the beginning of the nuclear industry to explore another path, one based on the molten salt reactor. They believed they could unlock the future by reviving ideas left behind 60 years ago. Oklo is doing something similar. Its founders claim their design can recycle nuclear waste and generate clean, carbon-free power, this time using a liquid metal-cooled, metal-fueled fast reactor, based on experiments from 1964 at Idaho's experimental breeder Reactor 2. Both companies share the same dream: take old research, mix it with modern branding, and call it innovation. But the reality of nuclear energy is rarely that simple. Transatomic learned that lesson the hard way. They ran into the same issues every nuclear startup faces. It's complex, expensive, and slow. Their initial design had flaws. Instead of consuming nuclear waste, their reactor would have actually produced more of it. That mistake doomed the company, and by 2018, Transatomic shut down completely. But Oklo seems to be pushing farther than Transatomic ever did. And in September of this year, they broke ground on their first Aurora Powerhouse. The announcement sent their stock soaring up over 1,500% in a single month, pushing the company's valuation past $20 billion. That's a massive number for a company with zero revenue and no finished reactor. Let's take a closer look. Oklo's original Aurora design produced only 1.5 megawatts of electricity, barely enough to power a small neighbourhood. But now, their new version claims to generate 75 megawatts electric, or about 250 megawatts thermal. That's a huge jump, and it wasn't voluntary. The original design was rejected by the Nuclear Regulatory Commission in 2022. In a rare move, the NRC issued a formal denial letter saying Oklo failed to provide critical safety details, things like how the reactor would respond to a maximum credible accident, how it classified safety systems, and what would happen if a key heat pipe failed. Normally, the NRC works with applicants to resolve issues, but in Oklo's case, regulators concluded there wasn't enough progress and ended the review completely. So Oklo went back to the drawing board and restarted its entire design process from scratch. Here's the thing, this new 75 megawatt design has only been in development for about 3.5 years. That's far behind other nuclear startups like TerraPower, which have been refining their designs for a decade or more. Oklo is still in pre-licensing discussions with the NRC, meaning they haven't submitted a full application. So all we've seen publicly are staged renderings, concept art, and a few vague descriptions. On their website, they show an underground sodium-cooled reactor with a compact power unit on top. They even claim to have a customer pipeline of 14 gigawatts, but when you read the fine print, most of those are non-binding letters of intent. Their biggest deal is with a company called Switch, accounting for 12 of the 14 gigawatts, and even that isn't binding until at least 2044. So in reality, Oklo has no confirmed contracts, no revenue, and no licensed reactor. How does a company like that get valued at $20 billion? Let's compare. Cameco, the Canadian uranium giant, actually produces fuel, has customers, owns 49% of Westinghouse, and generates real profits. Its market cap? Just under $40 billion, only twice Oklo's. In 2024, Cameco made over $3 billion in revenue and $800 million in profits. Oklo, on the other hand, lost $28 million last quarter, mostly from payroll. They have a few $100 million in cash from fundraising, so they can keep going for a while, but it's all burn rate, no income. So the question remains, what justifies that $20 billion valuation? Because right now it's not fundamentals, it's hype. Even insiders seem to know it. Over the past year, multiple Oklo executives have been selling shares. The CFO recently cashed out about $10 million, and the CEO, Jacob DeWitt, sold roughly $33 million. Oklo may very well be building something real, but at this stage, it's a promise, not a product. So, is Oklo a $20 billion company with a revolutionary design, or just the next Transatomic, a great story with an ending we already know? For now, the excitement around AI, data centers, and nuclear innovation has lifted the stock sky high. But if history has taught us anything, it's that hype burns faster than uranium ever will. Want to know how we trade this major technology trend? At Truthsayer AI, we trade every single one of the alerts our AI generates. If you're interested, you can join the thousands of clients already using our app to capitalize on these trades every day. Remember, we trade every one of the alerts our machine learning and AI models produce. Sign up on our website, you won't regret it. Thank you for watching, and don't forget to like and subscribe.